But I had to pour into these areas that were weaknesses for me, because they would be periods of where it would invite impulsiveness. When a move starts happening, then I can see right away what it's going to do. My mind would feel like I got to go out there and just do something. I got to chase it right now. And the times I did it would hurt me. So I would study and study and study, and I would see these reoccurring things where these 3 candles all the time kept popping up. There was always this thing in between the middle of the moves, the real move, the highest high and the lowest low of a price run. If you start looking at your old data, and anytime a price run does that, find the 70% and the 30% range. In that range, you're going to see 1 or 2 fair value gaps. If you trade with what I'm telling you how to trade with when you see them, that's not chasing a move. That's not chasing price. You're engaging in something that's going to deliver on a larger scale, on a higher time frame price run. And then when I slowly transitioned out of trying to pick the high for going short and pick the low for going long, it was very liberating for me, because I demanded precision, and I hadn't grown into that yet. I grew into that over years of doing it. But I found the confidence and the ability to stay with it by trading the stuff in the middle of the moves, that meat on the bone. Now I can strip a bone end to end and get every little piece out of it, because I'm nuts with this. But you can't look at what I'm doing now and think that's realistic, because that's the same shit I fell victim to when I first started. Reading books from people that didn't do anything, couldn't do it live if they were in front of you. They're showing you everything perfect in the static charts after it happened. I'm not doing that with you. I'm doing it right when it's happening. I'm calling it before it happens. I'm showing you, look here, and it goes there. If I'm pointing above, your mind should be, okay, we're here at market price. He's pointing up there. So my mind should be, how does price deliver from where it is right now when he put that tweet out to where it goes to that level? What formulation of up, down type movement in price candles materializes? By studying that, even in old data, that's back testing, okay? You'll see these reoccurring signatures. Signatures are things that repeat in price delivery that are not coincidence. They're designed. It's because it's being controlled. This whole idea of being in at the highest high and the lowest low when you're trying to sell short and buy long, you need to put that aside for right now. That model that I taught in 2022, notice it didn't teach you to get the actual high when you're going short. What did I take away from you? The necessity of being right. How do you know when an equal high is going to be broken out and it's going to continue, or if it's going to go above a relative equal high and then a shift in market structure and then goes lower? That's what that model teaches you. It teaches you don't fucking worry about it. You're expecting the market to do what? Expand one direction or the other based on a weekly chart. What's the weekly chart likely to be reaching for? What does that mean? The same logic we're talking about in any time frame. Is it drawing up to an old high or equal highs? Or is it going up into a fair value gap that it hasn't reached up into? Or is it more likely to go down below old low or relative equal lows on the weekly chart? Or down below into a inefficiency, which is a fair value gap on the weekly chart. So you have to figure out, is it more likely for that weekly chart to expand, not to close up or down? Is it more likely to have a movement, expansion on that weekly candle up, or is it more likely to go down? That right there sets the stage for the 80% bracket for you to be right for your trades. And if you just operate like that, engage in your trades just like that, you won't have max loss days. Teaching to you, my haters now, okay? That's where you're blowing your shit. When you're doing your live streams and you're blown out, you're going against that. And if you just would put your ego aside and just listen to me, you don't have to rep me. Just listen. Fix it. Leave a better legacy for your kids. Once you identify that weekly bias on the weekly chart, is it more likely to have a big move up or a big move down? And it can only happen as small as one session. Like the big move for the week can happen just in the morning session of one day. And that creates that movement or expansion in the weekly chart. And it's done. You've fulfilled your bias for that week. But when folks hear me talk about this, they think when I'm talking about the weekly chart, I'm trying to predict the closing price of the weekly candle. That's not what I'm doing. I'm just looking for factors that would lend well to determining whether or not that weekly candle that we're forming right now or about to start later tonight for a new week, is it likely to expand up or is it likely to expand down? That right there is your 80% threshold that will give you the biggest edge in deciding on how you're going to trade going into the new week. But what if I'm wrong? Okay, but what if you're right and you follow the logic? It will reward you for being diligent about following the rules. If you're wrong, it won't matter because that doesn't mean it fails. It just means that transaction, your opinion about what you thought you were going to see in the market didn't pan out that instant, that time, that interval, that transaction. Just like a flat tire going to work. Just like a cake you left in the oven just a little too long. Just like when you're in the drive-thru, you're waiting 15 cars deep. You get up there, pay your shit, up the road you go. Oh, shit. They didn't give me my french fries. I'm already half home. Fuck it. Inconvenience. You lost something. You gonna go back and eat there again? Sure as fucking right you are. You absolutely are. But you're not gonna do what? You're not gonna turn that fucking car around, waste the gas and time, go right back through there just to get your fucking french fry. You're not doing that. So what do? You eat it. That's just an inconvenience. That's the life. That's life. And this generation doesn't get taught to accept those types of things. And you're all coming into this with this millennial mindset and you're all going nuts because you can't have it your fucking way here. You got to align yourself up with this. This market runs the show. And you have to align yourself with this expectation that's realistic. And it has to be uniquely yours. It can't be just because I say so. Not because I'm interested in that market or that specific setup. I have lots of setups. And I might not be watching a chart at the time that you say, oh, well, why didn't ICT look at this fair value gap? Or why didn't he consider this down close candle as an overbought? I'm not looking at that setup like you're looking at it. Don't be discouraged by that because that might be the very model that is yours. And it just didn't give you a setup then. What does that mean? It didn't give you a fucking setup then. Can't lose money on that one, right? But it moved. So fucking what? Bitcoin went up too. I ain't it. I don't give a fuck. I don't care. I know I'm going to catch moves this week in ES. I know I'm going to. Can you guarantee that you're going to make moves in Bitcoin? Crickets. So you're all hoping it's a moon run. I don't need a moon run. You don't need a moon run. You need consistently delivered setups every week, not a hope and a prayer. So between the moves, the highest entry point and the lowest entry point, using retail logic, my mindset went to the middle of the move. That's the meat. That's the biggest portion. The longest duration of price movement is in the middle, between the highest high and the lowest low. In any price run, any time frame, study it. And when you see that fair value gap in there, study it. How many times does it close that gap entirely and fill it in? How many times does it just go halfway? How many times does it just go in it just a little bit for institutional order flow entry drill and then continue on? And how many, here's the main thing. How many times does it go beyond the fair value gap that would stop you out if you were in line with that move? See, I've taught you how to focus on where the market's likely to go. If you got consistent with that, the next stage of your development is where should you place a stop that is reasonable in terms of risk and range that is a repeating process that doesn't deviate much. In short, where do you place your stop that allows you to put a low risk stop loss on, but you won't fear it being stopped out? But if it does get you stopped out, you don't care because you're probably dead wrong about the whole idea, and you would want to be out there anyway. Notice that is starkly different from that of a retail book that'll say, if you're going long, just go back to the old swing low and put your stop loss down here. I have so many books that talk that bullshit. If you do that, like if you're trading high grade copper, okay, high grade copper, every cent move, and it's $250 per cent move. That's like equivalent to having 5 minis on the S&P. That's what it's equivalent to. So if I'm looking at the chart and the example they're saying, you have to do this. I got to have a $2,000 stop per contract. Go fuck yourself, man. I'm not taking that trade. But now I could look at that same setup, break that bitch down, go into a lower time frame, wait for a market structure shift using 2020 model, wait for it to come back down to a fair value gap, trade that, put the stop loss below the fair value gap, and I'll use probably less than half of 1 cent move as a stop loss. See the difference there? Wisdom. Understanding. But none of the fucking books ever taught this. But it created and presented problems for me that I struggled with because I'm obsessively compulsive. So anytime an author admitted a weakness, they were treasures for me. Because well, not so much treasures, but they were treasure hunts. Because if you're telling me you can't do something, tell me you can't do something. I have respect for the fact that you're being honest about that. But I also used it as a pursuit to overcome you. You're my teacher because I bought your fucking book, I bought your course. But I'm going to lap you. I'm going to take whatever you have that works and I'm going to turn it up tenfold. And I'm going to make it superhuman. Because if it works, I know how to multiply that. And I'm not talking about over leveraging multiple contract sizes or lots. If we're talking about Forex, I'm talking about conceptually refining it down to a science. When I was going through school, my whole idea was to become a computer science major and be an information systems manager, where I wanted to be a systems analyst. I wanted the programmers to work for me. I would tell them what I wanted them to do. Code it this way. I want this as the outcome. We learned COBOL. Okay. It's not as active anymore. We had CICS. When I was learning computer programming, we were using mainframe. Okay. The big reel-to-reel shit. Yeah. And C+ was just becoming a thing. So today we have all kinds of languages that I couldn't even sit down and even begin to know. Like I just don't know. And I haven't done it for so long. And anything for coding, like when I have like easy language stuff for like TradeStation, I have a friend, Logan, he does all that coding for me. He's done it for years for me. And I tell him, this is what I want this to do. This is what I want this to do. I want this to do this. I don't want it to do this when this does this. And there it was. Long-term friend that I've met, and he does all that work for me. But when I sat down and looked at the things that other people say they have a struggling point with, for instance, take Jack Swagger's books, Market Wizards. In my opinion, Market Wizards 1 and 2, they're the only ones that matter. The other shit, whatever. And if you're listening and you're one of the people in that book, it's not to be disrespectful, but I just didn't enjoy any other volume in that series. The first and second one's great. What I liked most about those interviews is they talked about their barriers. They talked about what mattered to them. What was the things that were on their mind at the time when they were doing their trades or learning how to trade, how they came up. They didn't talk about what Jack was trying to do most of the time. I'm sure he probably cut most of the shit that they talked about in their interviews out. Otherwise, the books would be very, very long, right? But the things of importance to me would have been hearing how they dealt with certain struggles and what they did with it. Did they just cast it aside and say, fuck it, I'm going to fail with that every time I touch it? Or do they take in consideration that they could bring something to the table and elevate that struggling point to a strength for themselves and other people? Remember, I'm that guy at 11 years old was told by their grandmother, "You're lazy, honey. You're lazy." I'm not fucking lazy. Give me a thing to focus my attention on, and I'm going to find dozens of ways to do it exceedingly well. Because I want it to be easy for me. I want it to be second nature for me. And I'm trying to instill that on my young children. And it took time for me as a 20-year-old to figure this out. And my older kids are still wrestle. They're still wrestling with me. And I'm telling them, trade this way. Don't try to do these other things. Caleb looks at other things in the charts that don't matter right now because he has attention issues. Okay, he looks at other things, and I'm trying to keep his attention right here, this right here. Okay, and I'm trying to include that also when I'm doing my markups and my analysis. When I'm looking at the chart, I'm trying to highlight the actual portion of the fractal I'm only focused in. And I know some of you look at the chart and you think just because I have all those candles on the left-hand side of the chart showing that they're pertinent to what it is I'm trading. They're not. There is a segment of price action I'm working within, and it's the dealing range. I'm either looking for that range to be broken to the upside and targeting external range liquidity, or I'm looking for it to trade into a range above or below the existing range that's created. So that's all trading is. That's all it is, folks. And you're trying to make things much more complicated, and you accuse me of complicating things. I'm not. But the problem is many of you want to go through a 5-minute video and me explain everything in 5 minutes, and you can't do that. No one can. No one can. There's so many things I've already covered in this discussion here that you probably never considered. Like, shit, I never really thought about that. Right. And others in here probably listening to saying, this is bullshit. I wasted my time, and you're never going to make any money. I'm promising you're not going to make any money because you're coming in with this same expectation that I had when I was 20. I want it easy. I want it spelled out exactly like this. I want an ABC 1, 2, 3 method that I know will work all the time. That's what I wanted as a 20-year-old. That's exactly what I wanted. Because the books that I was buying made it seem like that was possible. And when I was blowing my accounts, hey, guess what? Something's wrong with this logic here. I got to figure out what the hell the real story is. And most of it was coming internally, manifesting itself in my trading. Feeling a strong desire to prove myself because I was scarred by a family member who I loved. So I manifested that tendency to overcompensate, proving to myself that I'm perfect and I have to be in at the highest high when I'm seeing a bearish divergence on stochastics and I'm bearish on the market. I have to be in there. I have to be in there. If I don't do that, my grandmother is going to say I'm lazy. That's how it scars you. That type of shit scars you deep when you're, well, wired like I am, which is not normal. And I'm not claiming to be normal. That's why I'm a very difficult mentor to learn from, because I have real mental baggage that I can't overcome. I can't. And therapists and all kinds of other bullshit, it ain't going to fix me. So I turned it into a strength. I sat down in an evening on the weekend, literally crying tears over these fucking charts that I could not figure out. I'm looking at these charts thinking to myself, I know I'm going to be able to do this. I know I can figure this out. But why the fuck can't I get this to be consistent? Why can't I find, this pattern to trade the bond market over and over and over again? I know it can be done. I see the moves after it happens. Why the fuck can't I see it before it happens? Because I was looking at 30 different ways that other people said in books. And when I was buying their VHS bullshit, okay, I was trying to catch up with whatever I thought was happening right then and there.